Welcome back to Griffonomics, where we conduct financial investigations to define the risk before we look at the reward. Today we're diving into the U.S. drone investment space, comparing Ondas, ONDS, Palladyne, PDYN, RCAT, RCAT, and Unusual Machines, UMAC. We've pulled together a pretty extensive stack of sources, really detailing everything from military procurement reform all the way down to the component supply chain. It should give us a really complete picture of the sector.
Yeah, and the entire investment thesis in this space really rests on a fundamental conflict that you need to understand. The U.S. drone space is betting that the Department of War's was revolution, and the Made in America mandate will force massive scale, justifying high valuations against the pervasive threats of binary execution risk and consistent shareholder dilution required to fund expansion.
That thesis just sets the stakes perfectly.
Yeah.
So let's unpack that first half.
Yeah.
The mandatory demand signal is coming straight from the regulatory environment, and we really have to start with the DOW's systemic overhaul, the Warfighting Acquisition System, or WAS.
Right.
This isn't just some memo. This is a foundational shift.
Mm-hmm.
The DOW has formally designated acquisition as a warfighting function.
And you really have to think about the magnitude of that statement for a moment. I mean, historically, defense acquisition has been, well, slow, bureaucratic. It was focused so heavily on compliance.
Right.
By calling it a warfighting function, the DOW is prioritizing speed to capability delivery above almost everything else. It's essentially turning this, Titanic of defense spending into a speedboat. The mandate is clear. Get working tech into the hands of warfighters now.
And in practical procurement terms, what does that actually translate to? I mean, speed means you can't build everything from scratch.
Precisely. It mandates a commercial-first policy. The DOW is now directed to maximize buying products that are already out there, commercially available. We call them COTS, or commercial off-the-shelf.
And that lets them bypass all the old, slow processes.
Exactly. They are actively sidestepping the painfully slow federal acquisition regulation, the FAR compliance, by using more flexible contracts. So if you already have a mature product, the door is just wide open.
Okay, so that's the massive pull on the demand side. But then you have the competitive moat that protects these companies from, say, foreign rivals. That's equally crucial. We're talking about the Made in America mandate, right? Driven by legislation like the NDAA.
The NDAA, the Countering CCP Drones Act, yep. This legislation creates a very effective competitive barrier. It prohibits federal agencies, especially the Department of War, from using foreign-made drones from, well, countries designated as security threats, primarily China. And this isn't a suggestion, it's a hard requirement. It automatically funnels all that government demand toward compliant domestic players.
But how fast is this regulatory shift actually moving? I mean, do we see an immediate, tangible market impact?
Oh, we did. And it happened in January 2025 with the T-Motor Sanctions. The sanctions created this immediate vacuum. They essentially froze out a major foreign supplier of drone components. So that was an instant catalyst. It created an immediate opportunity that forced this urgent need to secure and scale up a U.S. industrial base for things like drone motors and parts. And that's the exact environment that a company like Unusual Machines is built to capitalize on.
Okay, so the environment is defined. Forced domestic demand, mandated speed. Let's look at the four companies and their specific competitive moats. Maybe we start with RCAT. They seem to have the most established position.
I'd agree with that. RCAT functions as the platform and defense prime. Their competitive edge is remarkably simple but powerful. They are the program of record winner of the U.S. Army's Short-Range Reconnaissance Program, the SRR program, and their drone is the Black Widow.
A program of record is critical. That guarantees a long-term funded revenue stream, right?
It's everything. It establishes RCAT as a foundational supplier to the military.
Okay, next up is Ondas, ONDS, the regulatory leader. They seem focused on the underlying systems and infrastructure. Their moat isn't a massive defense contract, not yet, but pure regulatory dominance.
Absolutely. In the civilian sector, which is, quickly bleeding into military applicability, they have achieved the coveted FAA-type certification, or TC, for their Optimus system. This is massive. It streamlines approvals for beyond visual line of sight BVLOS operations.
In simple terms, that means the FAA has signed off on the robot flying itself, unsupervised.
That's it. No human observer on site, which is absolutely essential for scaling commercial and eventually military surveillance and delivery systems.
So if Ondas is dominating the airspace rules, we need to look at who's providing the brains for these drones. And that brings us to Palladyne AI, PDYN, the pure play software expert.
Palladyne's differentiation comes from their edge compute technology. So instead of constantly relying on a stable internet connection to talk back to some distant cloud server, the AI processing happens locally, on the drone itself.
Which gives you low latency decisions. Critical in a military environment where things can get jammed.
Exactly. And furthermore, their alignment with MOSA modular open systems architecture is key.
For those unfamiliar with that acronym, why does MOSA matter so much?
MOSA just means the military can easily swap out single components, like a piece of software, from different vendors without retooling the entire drone platform. It makes PDYN's AI software basically plug and play, immensely valuable for the DOW.
Okay, finally, rounding out this whole ecosystem, we have unusual machines, UMACs, the critical supply chain fix. Their strategy seems purely tactical.
It is. Their game plan is directly tied to leveraging that T-Motor vacuum we just discussed. They aim to become a critical Tier 1 component supplier of U.S.-made motors and parts. And the strong B2B manufacturing focus, it's highly effective. It's driving high margins. They hit an impressive 37% in Q2 2025. They're showing that solving a supply chain problem can be instantly profitable.
You know, the WUS revolution demands seamless integration, and it really feels like we're seeing a crucial dependency among these players. Let's look at those operational synergies.
The DOW is not just buying individual drones anymore, it's buying integrated effects. Take RCAT. They are the established capacity player, right? They're scaling Black Widow production for the Army. But the advanced functionality the military truly needs, things like GPS-denied autonomy, that's enabled by Palladyne's Pilot AI software.
Right, and GPS-denied autonomy. I mean, that sounds like sci-fi, but it's a non-negotiable military requirement. You're talking about the drone flying purely on visual data and internal sensors when satellites are jammed or spoofed.
Yep, and the platform requires PDYN's specialized edge compute to handle that volume of data locally. It can't go to the cloud. And then you have Ondas aligning with the DOW's explicit mandate to establish a wartime production unit, or WPU.
Which is designed to surge production capacity quickly during a conflict.
Exactly. And they are pursuing this through their investment in Rift Dynamics, which produces the WASP combat drone.
I have to inject some skepticism here, though. Our sources note the goal is industrial scale, reportedly targeting 20,000 units per month. It sounds like a moonshot. Where is the money and infrastructure for that kind of massive scaling coming from?
Well, that is the core conflict we introduced at the beginning, and we'll definitely get to the funding in a moment. But that 20,000 unit goal, it shows you the DOW's intent. They need disposable, high-volume systems that can be rapidly replaced. And Palladyne AI, well, they act as the AI enabler across this entire integrated ecosystem. Their low-latency edge AI directly feeds the DOW's broader technological mandate to use AI for advanced kill chain analysis.
This brings us to the most critical shared headwind, the structural and financial risks. All this ambition, this rapid scaling, and technology integration, it all comes at a staggering cost, which really highlights the growth-profitability paradox.
The structural risk for all of them is just a high cash burn. To invest in manufacturing, in regulatory certification, in proprietary AI, they incur substantial net losses. RCAT, even with a flagship Army contract, reported a huge $36.4 million net loss just in the first half of 2025. That money has to come from somewhere.
And that heavy reliance on capital leads directly to the dilution threat. The cost is consistently borne by current shareholders. These companies have to fund operations and expansion primarily through equity offerings.
And the starkest example of this dilution is Ondas. I mean, their shares outstanding have ballooned from about 17 million to a staggering 219.2 million. That is a massive transfer of ownership and a constant headwind on their share price. It shows you just how expensive this race truly is.
And finally, that brings us to the binary execution risk. The entire investment thesis, the promise that justifies these high valuations, it all hinges on flawless operational execution.
It's an all-or-nothing gamble on speed. RCAT must transition from prototype to industrial production. They have to scale Black Widow output to over 600 drones per month on schedule. Similarly, the key for unusual machines is its immediate manufacturing execution risk. They have to successfully launch U.S. motor production by their stated deadline of September 2025.
If UNK misses that September deadline, I mean, they hand the market advantage right back to rivals. It negates the entire T-Motor vacuum they were hoping to fill. So let's synthesize the investment case for the listener now. You have this mandatory policy-driven demand from the Washes and Cassical, and the structural competitive advantages program of record wins, supply chain vacuums, all demanding growth.
And the question is whether that mandatory demand signal, which is backed by billions in defense spending, can effectively outweigh the immediate financial risks, the high cash burn, the severe dilution, and can these companies flawlessly convert that capital war chest into sustainable, reliable operating profits without missing those critical scaling milestones?
The ultimate verdict really depends on whether the necessity of national security can conquer the very difficult economics of massive manufacturing scale.
Risk defined, portfolio protected.